Hey guys, welcome to this video. In this one, I'm just going to talk about the S&P 500 E-mini futures market as we close out the week on this Friday, the 27th of January. It's been a good trading week, a little bit slow, but I've put out loads of content and got some new guys on and they're enjoying it very much. So if you want to do that as well, go beneath this video, go and watch my YouTube, go and sign up to my free training and it'll get you sorted and get you going, not making stupid mistakes when you're trading, over leveraging, making bad decisions, basically, and trading like an idiot. So you don't want to do that. So let's go ahead and start. So if I'm on the monthly now, really on the monthly, what we can see is, it's not the best picture in terms of price action because you don't have much to separate this, but you're hitting onto previous resistance. You're fairly on the supply demand curve. You've come off from the top 4,800 to 35. You came all the way down and you've rebounded to 4,080, 4,100 area. So we're going to be better off looking at the weekly for this. You can see there's key resistance here. Okay, coming up to former rejection zones. Okay, and you're slightly trending down with this, although it's not as significant. So this area about 41.50 is going to represent your light short zone. Okay, you've hit on this several times. Market sentiment is dwindling a little bit. It's not harsh to the downside, but it's not pulling the market up either. There's a little bit of confusion. So you could take this lightly short. Okay, so instead of it doing that, what I want is this. Okay, so lightly short is the way it's going to go. And the reason for that is because you're hitting on that key resistance. Okay, your stochastic oscillator is coming up slightly, but we're lightly short because there's no standout sentiment in the market. There's nothing here to say, okay, this is going to scream up or scream down. Now, if the market sentiment does continue to improve and the comments that you see in the news are more positive, you might see this come through. Conversely, if it turns the other way, it will come down. Now, given you've already hit this area at 4,100, 4,150 two times, you bounced in it before, eventually, if that market sentiment does improve, which in the long term it probably will, I mean, if you zoom out, you can see the stock market generally comes up. So eventually, yes, you'll get through this and it will probably beat that previous high. So that's why we're lightly shorting it. How many times does the ceiling need to be hit until it breaks? In other words, is what you need to ask yourself. Now, as I say, we're not completely out the woods with it. If they turn around and say, you know what, everything's great, you might find it shoots up. Okay, conversely, it will shoot down. So if you are going to long it on a fall, if it does occur, okay, you can probably beat this last low and you could look lightly long down here. Okay, and I say lightly again because like the upside level, you've hit this several times. And instead of it being the ceiling, it's the floor. When's the floor going to break? When are you going to pound through? Okay, so light long down here, light short up here. That is your rundown for the S&P 500 E-mini futures. At the moment, there's not much market sentiment. There really isn't. So if we switch to the daily now, you can zoom in a bit more. You can see you've got this short, comes down, rebounds, doesn't quite go, well, it goes tiny bit higher, rebounds. Okay, and the trend starts to move to the upside intermittently. Now, there's nothing forceful in this. Okay, and this becomes your light short zone. And you can see the market is trending in that way. And it's just because the news that has come out every time has caused a rebound, then a fall, rebound, fall, rebound, fall. Now, that won't go on forever. Okay, it just won't. Whether the market pulling back to 3,500 is enough or not, it remains to be seen. But the point is, we're trading factually. We're trading what we can see now in the market. We're not interested. Everyone can have a debate as to whether the Fed Reserve is going to say something great, the Fed meeting is going to come out with something brilliant, or it's going to go down. It doesn't really matter because we're taking market value and we can hedge out if we get it wrong anyway. So just remember, we can all guess what way it's going to go. But if you just trade on a technical and factual basis with a bit of understanding of market sentiment, the fact that we're not quite out the woods, this could move up sharply or down sharply, then you'll be okay. But as I say, it's completely up for debate which way it goes at this point because there's no clear market sentiment. But I'm not going to guess. I'm going to slightly short at previous price action zones, and therefore I'm going to take market value. So thanks for watching, guys. Hope that really helps. As always, go to my YouTube, watch all the free stuff, free training, whatever, And I'll see you next week and we'll do some more again. Thanks, guys. See you there.